Hey, good morning, everybody. It's Wednesday, April 29th, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great products such as Originator Success, Grab and Go Social, and Rate Sensei. Great products to help my originator friends get more business from Google AI search and social media. Be sure to check those out. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time on Facebook and YouTube, where I talk about what's going on in the markets that day, what's going on with rates and pricing, and whether I would lock or float. Appreciate you being here. So glad you could join me. Remember, if you would like to join me each day and not miss a moment of the show, make sure you sign up for our text reminders so you get a text as I'm going live with the links and you won't miss a moment at hmmr.io/reminder, or use this cool QR code. Just a heads up, we do sell your information to Experian and you'll get 900 calls about your car's warranty. I'm getting 37 cents a lead now. So no, I'm just kidding. All of that is fake. We don't do anything with the information. I'm way too lazy to ever try to capitalize on that. I don't even bother to market to you or do anything like that. I just send you reminders out of my pocket for free because I love having you here and having you join me. Also, you can sign up for our daily email lock advice. I send out an email each and every weekday morning, and that is basically probably the abridged version of the show. Usually gives you some great info, so check that out. And our text alerts are www.ratetextalerts.com. Today's a good day to sign up for those. We'll be sending out some alerts this afternoon. We got the Fed meeting and all the Fed activities, of course, so make sure you are staying aware and protecting your pipeline. Today's reprice risk is high, so you want to make sure you're signed up for those. Otherwise, so happy to have you here. If you're here this morning, say good morning. Appreciate you being here. If you're watching the replay, do me a favor. Hashtag replay in the comments. It helps me to kind of figure out, although Facebook will tell me I have 387 views. If I got 10 people that said they watched this thing, then I believe the 10 people that actually watched it. So don't forget to smash that like button, subscribe if you're on YouTube. Make sure you give us your comments. Always appreciate you. Let's go ahead and say hi to some of the live folks here this morning. Giddy up, Mr. Randy Tico. Great to see you, my friend. Vicky McSweeney, good to have you here. Mike Tebow, Christine Conklin, Deb Dickinson, Angela Walters, Diana Nagy. Great to have all of you here. It looks like there's about 20 more of you that haven't said hello yet this morning. Jerry Simmons and Megan Bassell, good morning. Great to have you guys here. All right, let's go ahead and get started. We're going to go ahead and take a look at the technicals, and that's where we will begin our journey today. Mortgage-backed securities taking it on the chin already. Currently down 22 basis points on the day. That just sucks. You can see everything in front of the dotted line right here, this dotted line right here. We are just down this morning, and it's not good at all. So this is going to put rate sheets in a worse position. We'll talk about that a little bit more in a moment. 10-year Treasury yield 4.39, pushing up to that 4.4 area. We have not seen it this high since back here, the March 30th, last day of March. March 27th was when we had some of our worst pricing. You could see where the 10-year was back then, right above 4.46. And we're not far from that now, and we could continue to get worse. That's why rates are likely to continue to creep up from here. So let me go ahead and give you some more here. Let me save that. All right, so quick recap of what happened yesterday. Yesterday, we did the show. Pricing came out around 10 a.m. here, and things were basically pretty flat on the day. There really wasn't much movement. This is just normal trading chatter. Very, very little movement at all. No reprices worth yesterday. However, you need to look at the 5-day trend to see that big dip in the morning, which is what drove rate sheets higher yesterday. So we were basically, I mean, look at this. We had been just dragging at 6.32, and I had commented on that when you looked at the technicals, it really, we had seen, if we look at the candlestick chart over here, right? We look all over here. This is Friday. Friday is this green candlestick. And last week, we just got lower and lower. I'll switch to red. Remember, red, down, bad, all this bad for pricing, right? Lower and lower and lower. We saw mortgage-backed securities moving lower, and yet rate sheets managed to kind of keep this hold steady thing going on here. That did end yesterday. Rate sheet started to worsen. 6.38 this morning. You're going to be even higher than that. And I think we're going to definitely continue to move higher than that. So rate sheets were bad yesterday and are continuing to get worse this morning. That's what happens when you are down 22 basis points. You could see where we were here and where we are now. And of course, that is a big slide lower. So, magic question, do you think the Fed meeting this afternoon is going to help rates to improve and recover? I do not. I do not think that at all. So we'll continue and get into that. In fact, reprice risk on the day today is high. I think that we're already off to a weak start, and I think it's going to get worse from here as we continue to look at where things go and why. So let's take a look at some of the headlines, and we'll see why we're seeing such a weak situation this morning. As we take a look at this, first things first, we'll start off with durable goods. So durable goods came in this morning at 0.8, which they were expected to come in at 0.5. You could see that right here. Durable goods items meant to last for at least 3 years, including orders for commercial aircraft and military equipment, rose 0.8, largely in a largely broad advance. And notice how they actually look at this. It says extending a year-long stretch of solid capital investment fueled by spending on artificial intelligence. So AI and everything required to run AI is part of what's pushing this forward. Economists expect business investment will remain solid this year as companies keep spending on artificial intelligence and take advantage of more favorable tax provisions at the same time. It's unclear how guarded firms will be if the Iran war isn't resolved soon. I hate that they call it a war. The conflict has sharply driven up prices of oil and some other commodities. Durable goods reports showed increased bookings for communication equipment, electrical hardware, motor vehicle, and parts. Orders for military aircraft also advanced sharply, while bookings for machinery and metals rose. Non-defense capital goods shipments, including aircraft, which feed directly into the equipment investment portion of the gross GDP, rose 0.5% in March. Rather than orders that can be canceled, the government uses data on shipments as an input to GDP. So anyway, you can see there was a stronger than expected reaction to the GDP data, or not GDP, the durable goods data this morning, right here at 8:30 a.m. So, at 8:29, we were at 98.88, and then it dropped all the way down to 98.77. We lost about 11 basis points because this just signals economic strength. And then we've seen a continued sell-off from there. Everybody is very jittery today heading into that Fed meeting, and that's not really too good for us. So another thing to talk about, no, the Iranian oil industry isn't about to explode. This is one we started talking about yesterday. This is in the opinion piece, which I find to be a little bit odd, but it still had some pretty good information on there, basically talking about what we talked about yesterday, the fact that shutting down wells and how it works. Crucially, the president is convinced that shutting the wells down would damage them irreparably. When it explodes, you can never rebuild it the way it was, about 50% of what it is right now. But that actually isn't necessarily the way that it goes. And there's more information in this article talking about how they could actually wind things down a little bit over time. And basically, they've got more time. Why are we talking about this? Why does this matter? Again, part of the reason that this matters and that this is such an important topic is because of how long can Iran continue to hold out before they need to negotiate, and the U.S. has more leverage to force them to take a deal that limits, the nuclear capabilities and things like that. So the longer that Iran can continue to, just stockpile oil, the longer this thing's going to run on. And that means rates can't go down. Mortgage rates will not drop significantly, and they might not move that much lower even from here, but they're not going to drop until the Strait of Hormuz is open and there's commercial traffic, till oil prices drop back down, until we get a situation where gas prices start to come down, inflation is less of an issue, all of that. Right now, when you look, Brent crude up to 116. Now, again, we're not necessarily seeing a as strong of a reaction in bonds because of this, but it's absolutely playing into the fact that bonds are losing ground the last few days. You're up over 116. If we go over 120, that's going to be bad. And that could happen today. That could absolutely happen today. And we could see things continue to get worse. I mean, so my opinion remains the way that it has been. Today, reprice risk is high. We're going to have the Fed meeting at 2 p.m. Eastern time. We're not going to see much happen there. One thing that we want to keep aware of when it comes to that is, what's going to happen. Not this girl. I don't care about her. What happened to, here he is. So this is the article from Nick Timros in the Wall Street Journal. And it talks about the bigger question for committee members is whether they should change their formal statement to imply rate cuts are off the table. So Fed is going to come out with their policy statement at 2 p.m. Eastern time. There's usually not much movement between those statements, small changes. This is a very good insight from Timros. And he's talking about how changes to the language have historically mattered at least as much as the rate decisions. And a 9-word phrase suggests the next policy move is more likely to be a cut than a hike, has been there since late last year. If that disappears this time around, if we see that change and that's no longer the case, if they take that out, then we could see markets react to that statement. Now, of course, at 2:30 p.m. Eastern time, we're going to have Fed Chair Jerome Powell's press conference. Press conference is going to have the same thing that we've really grown used to, right? So they're going to ask him about the situation in Iran, energy prices, inflation. They're going to ask him if he's going to leave. Now, remember, Powell said that he was not looking to leave until everything was wrapped up with finality for this probe. This probe is far from wrapped up. The DOJ did drop the probe for now, but with a caveat that they could restart it at any time. And they basically shifted it over to the Office of the Inspector General instead of the DOJ. So, anyway, so we talked about core capital goods jumping by the most since 2020. Again, this is why you saw such a strong reaction, jumping the most since 2020. Look at that headline, right? This we've got, take a look here. U.S. signals no let up of naval blockade as it aims to squeeze Iran. So Iran, this may be more than the bombing. This may be what actually helps us to get an end to this thing ultimately. Is the blockade, but we'll see. But it's, so Trump is not willing to end it early to open the Strait of Hormuz until they get a deal. Most traders lose on Polymarket. Winners look like bots. Oh, I didn't even know why that one's. Oh, that's because it's Markets Daily. So this is the Markets Daily and 5 things you need to know. Oil prices rising again as the U.S. and Iran remain deadlocked. The risk of higher inflation is prompting bond traders to brace for 30-year Treasury yields above 5%. And again, as this remains going on, it's kind of a double-edged sword because the immediate reaction is that it's going to drive inflation. Inflation is bad for bonds. Bond prices get worse. That means yields go up. That means mortgage rates creep higher. However, the longer this thing goes on, if we do see any true economic impact that's negative, a weak economy is going to help rates to improve over time. So, but that won't come until later in the year, and that's not where we're at. So we will see. And I'll go to your comments in a minute. I just don't want to lose my steam on what we're covering here. So DOJ's partial reversal on Powell probe keeps the Fed drama alive. So we could see a world where Kevin Warsh is confirmed as the next Fed chair, and that could happen before May 15th, which is when Powell's term as chair is over. Powell's term as a governor, though, isn't up until 2028. I said 2027 the other day. It's 2028. And he has said that he won't leave until the probe is completed with transparency and finality. Now, I see some comments here. Ron Siegel said, Is the meeting today or the announcement today? Both. The meeting started yesterday. The Fed meeting runs 2 days. So it started on Tuesday. It'll conclude today. And the policy statement, which is the rate statement, will also come out at 2 p.m. Eastern time today. Derek said, I don't think the Fed is a big market mover with the rest of the noise in the market. I think that it is right now. We'll see a reaction. Markets are very jittery. Bonds are jittery this morning. So I think we're going to see a reaction. So otherwise, I would have agreed with you, Derek. That's kind of the stance I've been taking. But when I wake up and I see that we're already down 25 basis points to start the day today, that shows that we're definitely seeing more of a thing on there. I feel like we're in a fake relationship with mortgage rates. Oh, that's funny. Back to an oil-driven market to an extent. Yeah, absolutely. Especially if it breaks 120. Any policy statement today will not mean much with the new chair coming in prior to the next meeting. I want to agree with you, Ron, because, but if they take that statement out, like you've said before, markets overreact. One thing we know for sure is that markets overreact. So while what you're saying makes logical sense, will we get a logical reaction? That's kind of the question. Ron also said, according to that headline that we were at here about Powell and hold on, where are we? Here it is. So according to this, you're saying Powell wanted the case moved to the Inspector General's office. Let me take a drink, guys. That's a good question. I don't know if he did or he didn't. But until they actually wrap it up, he could step down as Fed chair, but stay on. No one says he has to stay on until 2028, but he has said that as it says here, Powell has pledged to remain at the central bank until the Department of Justice probe related to cost overruns in a building renovation is completed with transparency and finality. Funny thing, by the way, Trump's ballroom, initially the estimates were 200 million, now 400 million, double what was originally there. I know that this is supposedly being funded with private money, arguments being anything funded with private money opens the door for manipulation for favors. But it's still, isn't it funny how the cost overruns on Trump, who is a professional builder, how his cost overruns in a very short period of time have doubled, probably because he wants more gold trim everywhere. But yet this is what they're going after, this whole thing. So we know this is all a poo-poo bunch of nonsense here. But we'll see. We will see. So anyway, that's what we got going on this morning with all of that. I hope that gives you some insight. Again, anything closing near term, I would be looking at locking it up. I feel like this afternoon is going to get even worse. I've been in a stance to lock this the last couple of days. I felt like we had some really good pricing and we wanted to take advantage of it. Anything that's closing at the end of May. So this is what I wrote in my written lock advice this morning. Again, if you're looking at the end of May, we don't want to focus on that what's happening in the next 2 weeks, which is where rates will move higher. We're looking, next week, do we see weaker jobs data? What happens when Warsh is confirmed? Will we see a reaction to that? And then most importantly, will the Strait of Hormuz open in the next couple of weeks? That's the big market mover. That will drop the price of oil again, well under $100 a barrel, push gas prices back down. The longer this drags on, the harder it is to see rates move lower without something happening. So that's kind of where we're at. They changed the ballroom to have a major underground addition for an updated defense situation room. Yeah. And they changed the situation in the Fed building multiple times to meet historic requirements and have underground parking and have ADA requirements and all kinds of things. So there's reasons for everything. I think all of this is all nonsense. So anyway, that's what we got, my friends. Anything is closing 15 to 30 days. Again, you can cautiously float, but consider locking anything risk averse because we don't know in the next 2 weeks, are we going to see 2 weeks is going to fly by. And if we don't see something wrapped up with the Strait of Hormuz, rates are going to be, probably an eighth of a point higher, maybe even a little bit worse than that between now and then. We will see rates creep higher. So, the longer this draws on, the worse it's going to be. So the committee for Warsh's confirmation is tomorrow. Thank you, sir. Appreciate that. Ron Siegel is pointing out for that. And again, but even if Warsh were to be confirmed, Powell staying on, he's going to have a lot of influence, and that's what markets are going to be looking at. So, all right, my friends, let's wrap it up for today. I will see you tomorrow. Remember, if you're not signed up already, sign up for the text alerts. We're going to be sending out texts as everything happens this afternoon with the Fed. We'll send out one a few minutes after 2:00. I don't anticipate a strong reaction to the initial policy statement. I think we'll see more of a reaction at 2:30 to Powell's, prepared comments. And then by 3:15, you usually see more action as the questions have rolled out. We know he's going to be asked all the standard stuff we've already talked about. So anyway, hope that helps. Hope you guys have a fantastic day, and I'll see you tomorrow. Take care, everybody, and thanks again for joining me. Bye-bye.